Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Friday. We've had an interesting week, which is only going to get more interesting as of today, as we are really officially, if you will, embarking on earnings season. Yeah, we've had earnings here and there, but until we get that slew of financials data, it's not really game on. And as of today, it's game on. Over the next week or so, between now and I guess it's Thursday, we're going to have a lot of those big banks reporting, which on the heels of the regional bank crisis, again, regional, I emphasize regional bank crisis, because now we can start to see, hey, where are the flows? And some of those cues and clues are really interesting. There are things that sometimes exist apart from our charts. And I look at our charts and I put this line in this issue of This Week in the Market, which should be available sometime after lunch, likely today. But I love this line. It's very much inspired by a lot of the greats, a lot of the traders. I think, probably Stan Druckenmiller talks about it a lot, and that is, what we know is already priced into charts, right? So one of my first mentors said, look, what does a technician or a chartist really believe? That whatever's known is already been discounted. It's baked into the cake. And then Stan Druckenmiller's line, I think, which pretty much says it as well, which is if it's obvious, it's in price. It's already in the price. And so that's where, and if it's in the price, it's in the indicators, right? And that's where when I start taking a look at where, say, the 2-year note is sitting, or where the long bond is sitting, or where, for example, ITB, home construction and home builders, XHB, are sitting after 5 weeks of drops in mortgage rates. Sometimes our bigger narrative is somewhere just outside of price, where we're trying to find a story, right? And then see how price responds. And that's really the job of the newsletter that I put out every Friday. Where is that story? And then are we seeing the data in the flows? Are we seeing the data in price and things like that? So really stoked to add that to the repertoire of the things that we're trying to put together as we're basically trying to put on smart trades, right? Okay, so with that being said, let's go ahead and jump into our questions. As always, if you have any questions, feel free to type them in. First come, first serve. And first up, all right, here we go. Hey there, Jack. Good morning. With retail sales missed this morning, is bad news becoming bad news for equities? What are my thoughts on the earnings with several banks this morning? Sure, let's unpack that, shall we? So the first conversation, retail sales, for those of you that are maybe not checking the calendar every morning, and I hope you are, but if you're not, really easy to fix. Head on over to forexfactory.com. And let me get my dark reader on here. There we go. Check out forexfactory.com. Head on down to Friday's. There we go. Friday the 14th, and you'll see core retail sales, retail sales. We've got an FOMC Waller event that's happened about 15 minutes ago. Capitalization rate happening in about 10 minutes. And then University of Michigan consumer sentiment at the top of the hour. So we got a lot of hot zones coming up. And then, as you mentioned, the financials earnings. So let's start with core retail sales. Maybe you can see it, maybe you can't. Notice I haven't even refreshed it. I don't even know what the number is. And frankly, I initially, maybe for the first half hour or hour, I really don't need to know, right? So notice I haven't even refreshed it. I don't know if it was a miss, if it was a beat. Where do we want to measure this, right? Knowing what the measuring stick should be is really a big part of this. So let's jump on over to the intraday timeframes. All right. Now, yeah, I could look at this on a 1 hour, but that's really more of a swing trading time frame for me. Let's take a look at the 5-minute chart, as you can see here, of the S&P. So the 5-minute chart is my preferred time frame for day trading. So first of all, 5-minute. Second thing, what's the underlying market trend? Up, down, sideways? What's the momentum doing? Bullish, bearish, neutral, right? And then what was the reaction at 8:30, right? That's really the question. What was the reaction at 8:30? And here's your 8:30 candle. Frankly, I think to take the move out of context of what we've been doing all morning is tricky. The one thing I will say that's borderline bearish is that it seems that we're breaking the 200 on the 5 minute. So that might be borderline bearish right there. I mean, borderline, right? But overall, we're in a neutral environment. And arguably at this point, we're oversold on the slow stochastic, right? As we are at the low end of that indicator. This is the high end, that's the low end. So we're arguably oversold. And in terms of what it is that is bad news, I don't believe that's the case. It's driven price down to pre-market lows that we saw around 6. It's not as if, and here's the question, Jack. You might say, Rog, how do I know if it's good or bad? My litmus test is this. Is price going anywhere new? Is price going anywhere new? And the bottom line is not really. So I can't say there's anything more than maybe another reason to push the lower end of the range. Clearly not bullish, right? But I don't know that it's overwhelmingly bearish either. All right. So then the next thing was earnings. The best way to look at earnings right now, maybe in a simple way, is just look at XLF. XLF, and this is another thing we put in the newsletter, right? XLF has done two really important things. And this is where I say sometimes the important things that are happening are not necessarily on the price chart, but they're happening in other places. So I outline a number of things that have happened since the 10th, not to mention the actual shift to a neutral environment, which could be a precursor to further movement. There's a number of levels we have to take out before we can say we're going to get some really good bullish follow through. But there are a number of things that are happening in XLF, but not happening in KRE that are fairly bullish, fairly promising for more upside. Obviously, earnings are going to be a big part of that. All right. How is it that everyone here is measuring earnings? Do you all have a preferred calendar? Where is it that you go to track earnings? So first of all, I think it's ideal to track earnings about 4 to 5 weeks before, 4 to 6 weeks even before the actual release. Realize most earnings calendars and most earnings discussions are usually starting 2 days, 3 days, a week. That's, to me, not ideal at all. That is fine if you're a trader who likes to sell premium. If you're a trader who wants to sell premium, then it makes perfect sense, because at that point, the scales have tipped in favor of those traders trying to take advantage of implied volatility, right? I'm a directional debit player. So the rally into earnings or the whatever the environment is into earnings starting 4 or 5 weeks out is ideal. That means I need a calendar to talk about earnings, not 48 hours before, not a week before, but maybe a month before. So by the way, what would that mean? Today being the 14th, that means the next batch of earnings I'm thinking about really starts in the middle of May. Take Two, Home Depot, TJ Maxx, Cisco, Alibaba, Walmart, AMAT, Deere, AutoZone, Rise. I'm already thinking about those names, right? However, take a look, to your point. What do we have coming up today? All right, what do we have coming up today? And I haven't refreshed this since I was looking at it yesterday, but we got JP Morgan, PNC. By the way, UNH, the number one weighted stock in healthcare, which has seen a lot of flows in April, a lot of Q2 rotation. Wells Fargo, Bank of America, Goldman, those are coming up early next week. So we've got a pretty good stretch of hot zones, scheduled high volatility, high volume events that we expect are going to be quite impactful. So when we got a hot zone, now earnings themselves are just one type of hot zone, right? So if you know the term, right, and apply it to earnings only, that's one corner of it. Data releases, FOMC, these are all hot zones, but they've got to be scheduled. We've got to know when they're coming out. JP Morgan's important. Could JP Morgan set the tone? It could. It could. JP Morgan could very much set the tone for earnings, because after Berkshire, JP Morgan is the number 2 weighted stock in the XLF. So my thoughts are, let's see how JP Morgan goes. Let's see if we can get above some of the 200 exponential moving averages. Let's see if we can break the downtrend, because XLF is still sort of struggling with getting out of the regional bank crisis triggered weakness. And really, I think generally from a big bank perspective, we're trading at, by the way, 135 right now. So for those of you that are wondering, hey, Rag, we're there. That's what I'm looking for. Can we get above the 200? Can we get into the bullish hemisphere? And it's looking like this is what we're wanting. I'm bullish, gang. I've been talking about this since last July. It's tough for me to sit around bemoaning any kind of the most anticipated recession in history. Things we know can't shock us, right? If it's obvious, it's in price. If recession is so obvious, it's already in price. What was it in price? The regional banking crisis, right? So remember, if we're talking about it here in Charts and Coffee, if you're hearing about it on television in one of the rooms, it's likely in price. So thanks. Great way to kick off the show. Thanks, Jack. All right, question from our training room. Hey there, Earl. To what extent do I believe weaker second half earnings are reflected in the charts? To what extent, Earl? Actually, it's funny you asked that, Earl. So one of my hypothesis that I try to back up with data, that's what I try to incorporate into the newsletter. One of my hypotheses is basically this. I'm not even sure that equity markets are particularly concerned about the current earnings season. Forget second half earnings, because it does seem for now equities are looking past earnings season, Q1, Q2, Q3, Q4, looking at second half of the year. The only thing that could be concerning would be forward guidance. It's disappointing. I'd keep an eye on consumer discretionary and tech specifically for that. If you all have been tracking Apple, there's some and any kind of upgradable type consumer electronic. Those patterns are a little troubling, because upgrade cycles were pushed and affected really dramatically by tech purchases in 2020, right? I'm sure the fitness industry is saying the same thing, right? Look at Peloton. Yeah, we sold a ton of those in 2020, but what do we do in 2023? I think a lot of industry, a lot of companies experience a sort of Peloton type purchasing cycle. So it's kind of interesting how that could play out with iPhones and Macs and everything else. Keep an eye on XLK, keep an eye on consumer discretionary, but really continued strength in bonds, gold, and equities are going to rely on this expectation that come July, come September, we're going to get a Fed pivot, and everything is basically, we're going to get a pivot. If that falls through, look out, completely different conversation. Okay. All right. Next up, good morning. Good morning. All right. Let's see here. What are my thoughts on UWM? All right. So we're taking a look at an ultra. So this is basically the Russell, right? UWM. Okay. Or IWM, however you want to look at it. So let's go to the way that we would tackle any variation of an index. In other words, S&P ES futures, that's the touchstone. SPY, SPX, any ultras and 3Xs and inverses, all those different variations of a base S&P understanding. To me, I'll start with the touchstone. Okay, rainy day. So if you're playing an inverse, flip it around. If you're playing a 2X or 3X, remember it's leveraged, but we start with the RTY. RTY is going to continue to struggle for one reason. Not that it's in a downtrend. It's actually not, but it's below the 200. And that is problematic. Bear with me here. That is problematic. And the reason I'm going to say be hesitant is if KRE wakes up, see what's the threat to the downside of RTY? That KRE finally stabilizes and wakes up. It's been stuck inside this Darvis zone since mid-March, since the end of that regional bank sell-off, right? So then I want to think about if KRE takes off, it's going to take the Russell with it. I cannot get really convincingly bullish on the Russell until we take out Darvis 2.0 resistance and the 200 propulsion, which, by the way, is overlapping beautifully with the daily price movement range yellow resistance zone. So if you ask, Rod, can I be bullish? Yeah, after weakness, call it 1780 to 1760, right? That's where I would want to be a buyer, down near the floor, up near the ceiling, 1850, or even, frankly, 1828. I do not want to be a buyer up there. So those are my thoughts on the levels and what I want to do at each of those. All right, next up, Chaz is asking about gold. Is gold a buy? Gold will be a buy kind of similarly to the way in which I'm talking about the RTY, Chaz. Gold is going to be a buy as it goes down and tests the daily price movement range. Volatility-based support and resistance. I know a lot of you are already very familiar with it because of the hourly price movement ranges, where we take the historical volatility, break it down into hourly pieces, hourly patterns, right? But what if we take that same data and then ask ourselves, what are the patterns from session to session? And that's what we've got here in the daily time frame of gold. And by the way, I put the same exact zones on the 1 hour chart. So whether you're looking at the 1 hour or the daily, those gray and yellow zones are at identical price levels. All right, having said that, in a word, is it a buy? Yes. In that gray zone? Absolutely. In fact, this week alone, that would be the third time that we bounced off that zone and followed. Well, I don't know about this third time, but the previous two times we bounced off that zone and moved higher. And in the Sector Secrets Mastery, we continue to have a long position in gold that we set up back on the 10th. So we're managing that position. And yeah, absolutely, I'd be open to another opportunity in gold. So Frank, yep, I got the IWM question for you. Yeah, absolutely. My pleasure. My pleasure. All right. Next up, would I buy Tesla at the current price? So Tesla is part of that troublesome, those two sectors I mentioned earlier, kind of a problematic part of the market. And I discussed these, and we're starting to open up the possibility to inflation affecting XLY and some of this upgrade cycle affecting XLK. Those are both topics I tackle in this week in the market newsletter. Again, it'll be released probably just after lunch. By the way, you can check it out for $7 for a month, which is crazy. So if you want to get 4 quite beefy, chart-filled, actionable insight ideas every Friday around lunchtime, check it out. It'll definitely be worth your while. Tesla is part of one of the conversations that we're having right now, which is it's consumer discretionary can continue to be weak. And why does that matter to Tesla? OS? Because Tesla is the number 2 weighted stock in XLY, second after another problem stock, which is Amazon. Interestingly enough, with so much of tech moving higher above their 200 period exponential moving averages, Amazon ain't one of them. XLY, ditto. And Tesla continues to struggle. So how could we buy Tesla? Well, I'm going to show you a previous pattern. This is something we do in the mastery, and it looks just like this. Once you understand the pattern, you just wait for it to happen again. Neutral environment, oversold, slow stochastic, daily price movement range. So fast forward, you know exactly what I'm looking for. We've got to stay in this yellow neutral environment. I would like the slow stochastic, our sector slow stow. Gang, if you're looking for a great oscillator, I've been using this thing for 25 plus years. Listen to me now, believe me later. Put a 21K 3D slow stow on your chart. It just works, okay? And I'd like to see it oversold. And as it's oversold, I'd like to see it in the daily price movement range or even at this Darvis 2.0 level. So I'm just looking for this pattern here just all over again. And that's the way that Tesla would set up. All right, gang, thank you as always for being a part of Charts and Coffee. I'll see you all Sunday for the This Week in the Market live show. And again, the report will be out just after lunchtime, likely today. Have a great rest of the day. Heads up, we still have a lot of hot zones to come. In the next 2 weeks, we've got a slew of earnings. On May 3, we've got the FOMC. We've got a really, really active couple of weeks coming up. Okay, gang, be good to each other. I'll talk with you soon.